Okay, folks, welcome to Swing Trading Today. This is Bob Desmond over the Contrarian Trader, and what we're going to talk about today are the charts implying that this stock market may just break out in a very, very big way, and that the economy may not be as bad as what it seems. And what I'm going to do is I'm going to cite a couple of charts, but I'm also going to first go over one of the reasons why I started the Contrarian Trader, and that reason is that after the dot-com bust in 2005, I started the Contrarian Trader because of all of the fraudsters, all of these gangsters who pretended to be in the know, analysts, in the know, CEOs, and all they were doing was pumping their book, pumping their stock, and it infuriated me because many of these names went to jail. Many of them were barred from the industry. The SEC barred them from doing business on Wall Street, only to reemerge years later. Now, why am I bringing this up? Well, I've tempered my comments over the years, but the other day I was looking at some charts of the Baltic Dry Sea Index, the Dow Jones U.S. Trucking Index, and that gives me a feel, along with the transports, it gives me a feel for how the overall economy is doing. And then I just happened to run across an article. This article here, published by Business Insider, headline, Trucking Companies' Income Plunges by $2.5 million to $1,000. And here's the top line. Most people don't read beyond the headline, but they'll sometimes read beyond. The industry that moves 72% of goods is suffering through a downturn so epic that some truckers are calling it a bloodbath. This is fake news. This is fake news because when you dig down below the surface and you take a look at what the trends are for 2019, 10 trucking industry trends for 2019, this was published a year ago, and you can see that there's a capacity crunch. The industry is experiencing a low truck supply but high demand for freight. One of the many reasons why this is happening is driver shortage. So the industry is having some challenges, but the way the writer Rachel Premack over at Business Insider makes it sound, she makes it sound that the entire industry is in a bloodbath. The economy is slowing. And when you read down below, it really comes down to one trucking company. USA Truck reported $2.5 million. So they had a bad quarter. What can you say? So this article here flies in the face of industry data. It was written by Business Insider and distributed by MSN News, all in the tank for the Democrats. And the founder of Business Insider is this guy here. This is Henry Blodgett. Meet Henry Blodgett. Now, Henry he's a smart guy. He founded Business Insider a number of years ago and sold it for $343 million to some German company. So Henry did a nice bounce back. What did he bounce back from? Good old Henry was pumping .com stocks while at Merrill Lynch, one of the worst companies you'll ever want to do business with in your life. They're now owned by Bank of America. He was the former managing editor at Merrill Lynch, Pierce, Fenner & Smith, and the senior research analyst and the group head of the internet sector. Again, remember, I'm talking about the internet.com era, not the financial crisis. He was told to pay $4 million to settle the charges against him and censured and permanently barred from the securities industry. Then he went on to found Business Insider. So this is fake news. Now, how do I know? How am I confident that this is fake news in reality? Not just by doing research of the industry. All you need to do is take a look at the monthly chart of the Dow Jones U.S. Trucking Index. And remember that article. They said there's a bloodbath in the industry. Yet, we are breaking out of a triangle formation. We have a double bottom setup. We are breaking out on a monthly basis. Today is the last day of the month. And unless the Federal Reserve disappoints the markets very, very poorly, this sector is going a lot higher. But remember, Business Insider and MSN just told you the industry is in a bloodbath, but the charts say otherwise. Let's further validate what we're hearing out of the fake news. The global economy is doing horribly. But take a look at the Baltic Dry Sea Index. This is the pricing power of dry bulk shippers, those who carry goods through ocean freight. We are at highs not seen, meaning pricing power, since 2013. Now, a couple of factors can affect this. One is capacity of ships. Maybe they took ships offline, driving up pricing power. Maybe it's the concerns over in the Middle East and in the South China Sea forcing up prices. Or maybe, in reality, there is a global expansion going on. Look further on to the Dow Transports on a monthly basis. We're in a triangle formation, very similar to what we saw here on the trucking sector. The only thing different is that we do not have a breakout yet on the Dow Transports. We are very close. A very bullish month. Now, what I will say is this, is that for these sectors to continue to break out, the Federal Reserve is going to need to accommodate. They're going to need to cut rates. Will a quarter point cut be enough? I don't know. I'm not that smart. I doubt it. But the lesson learned here, folks, is be careful of the fake news that you are reading, or else you could miss out on a lot of opportunities. Learn to use the charts and think for yourself. Let's take a look at the pre-market activity on this Fed announcement day. And then we're going to do a couple of members' stock chart requests. And we'll talk also about some symbols that we are watching. So stay tuned. All right, let's kick things off with the U.S. dollar because we are big time long of the gold stocks. We did book profits on our USLV trade. I will be appearing on a webinar with TrendSpider on the 18th discussing that trade. They invited me on to discuss it. So please, when that invite comes out, join us. All right, so here's the U.S. dollar. We are bull flagging out this morning, and we are threatening to break out. So that makes me a little bit concerned about two things. One, the size of the Fed rate cut, if we do get a rate cut. Two, what will the reaction of the gold stocks be if and when we do break out on the U.S. dollar? Let's take a look at gold in the pre-market. Gold is up. And as I discussed with members last night on Market Wrap, gold and silver can rally when there is geopolitical risk, meaning fear. And that fear, I believe, is coming from what is not being spoken about all that much, and that is Brexit, a hard Brexit. So gold, you can see that we have broken out on this 4-hour chart. These will all be 4-hour charts, and it appears as though we are going to press higher here, and we are shrugging off the setup on the U.S. dollar. Gold and the U.S. dollar have been trading in tandem, which is a fairly good sign for gold longs. So we'll remain long. Let's take a quick look at the S&P 500. We are up just shy of a quarter percentage point. We are above the 3,000 level. I don't expect a volatile morning, but I do expect a volatile afternoon. Let's go to the stocks that we are watching, or ETFs, I should say. Okay, silver, USLV, silver. We are looking to rebuild a position in silver. We sold back here when we became extended relative to the third standard deviation Bollinger Band. We were looking for a pullback to the 76 level. If the Fed disappoints, I'm sure that we'll get it. If the Fed delivers on what is anticipated to be a rate cut, you may just see a continuation breakout here, and we will look to open up a long position. Will I go chasing the shares? Probably not. What I will probably do is sell, not buy, sell puts. And that will reduce our basis cost should those shares get assigned to us. And if they're not assigned to us, we will collect a premium. Now, we are beginning to break out on a daily basis. Volume 2 weeks ago was just simply outstanding. Even last week was very, very good. But you did see some selling mixed in there. This is extremely volatile, folks. So members, more to come on USLV. Cure, healthcare ETF. We have broken out. We've pulled back. We've done a retest. This is one where we're probably going to open up a small position fairly soon. I do send out trade alerts to members when we buy, when we sell, and we may just sell some puts. I'll talk about strike price when I open up the trade with members and duration, how far out we want to go. But this is a sector that looks ripe for a continuation breakout. What else are we looking at? The regional banks. I've been talking about this for a while. I even did a video a few weeks ago when we booked profits on DPST. We are looking to get long of it yet again. We identified a breakout back here on the 24th. We've been consolidating gains yesterday, very close to an outside reversal day. Volume could have been better, but really good price action. Ultimate oscillator moving higher. RSI moving higher. I think that we're going to move higher here on the regional banks. But the fly in the ointment here is that the XLF, which includes the mega cap banks, they pulled back. But that could be for different reasons. They have some serious problems. Citibank, Deutsche Bank, all these names have some serious issues going on. And they're pretty much exclusive issues to the money center banks, not so much the regional banks. So that could be why you're seeing the positive divergence in the regional banks relative to the money center banks. So we're watching this one fairly closely. And we're also looking at the TNA. The TNA is the leveraged ETF putting you long of the IWM, the small caps. And yesterday we flashed an outside reversal day. So it may be a very busy day today and tomorrow as we watch the markets react to the Federal Reserve announcement. As I always caution members, the knee-jerk reaction is frequently the wrong reaction by the market. Allow the markets to settle down. And what I want to do now is take a look at a couple of members' stock chart requests. Okay, so this symbol was requested of me by a fellow member, Barun. He posted a message in the forum. And he asked whether or not this was a candidate for an extreme oversold stock. And at one point in time, it would have hit the screen, no doubt about it, because you had RSI well below the 20 level down by 15. I don't think that we've seen the lows here, though. And in all probability, we will rally probably up to the 210 level. But I think that we're going to roll over here and proceed down to probably this level here at 177.93. The key to remember here when you're trading these extreme oversold stocks, that while RSI may meet the criteria for being an extreme oversold stock, that's only a piece of the puzzle. The shares, let's go to a weekly chart. The shares need to bounce off of historical support, which we did on a closing basis. The last time we saw this week's lows was back here in January of this year. But when I trade extreme oversold stocks, you need to assume that weak stocks tend to get weaker and strong stocks tend to get stronger. So there's a probability here that we will overshoot to the downside below the support level and head down here to extreme support, which was last seen back in December of 2018 when we overshot to the downside, found support at the 177.93 level, which had acted as resistance back here in August of 17. Then it acted as support in September of 17. That's what we're looking at again. So I would hold out for that support level to get struck, and I would also be looking for RSI to drop down back down below the 20 level before I got involved with the trade. At current, we're at 21.05. Moving on to NUE, which is another member stock chart request. I'm going to use TrendSpider for this one. All right, so what we're doing here is we're leveraging the multi-time frame analysis on TrendSpider. So we're using a daily chart with a weekly overlay. As noted in dashed line, you have blue, red, gray, green, representing differing support and resistance levels. And you can see that we broke out here on the 26th of June. We've been consolidating, holding weekly support, yet I'm looking at a daily chart. We popped above the rising 20-period moving average. We are holding it. I think that we're breaking out here. RSI is rising. We have a double bottom setup on stochastics and a higher low. I think we're going to hook back up. I'm bullish on Nucor. Let's take a look at it from a higher level view, weekly chart with monthly overlays. So what we have here, and if you folks want TrendSpider, there's a link below. If you're watching us on YouTube, a link above. If you watch us on the website, there's a discount, CT25Z. Again, CT25Z if you want the 25% discount. All right, so Nucor has rallied nicely off of support, monthly support. We, however, do have resistance above at 57 spot 41. So just be aware of that. If we break above it, I would be a buyer all day long because we have clear blue skies up to $62 per share and above there up here to around $68 per share. So I'm liking Nucor. And that is it for this morning, folks. Everybody have a profitable trading day, and I'll talk to you soon.